Not sure whether to choose a 2-year or a 5-year fixed rate mortgage? You're not alone. But here's the thing, most first-time buyers don't realise. Picking the wrong one could quietly cost you more than you think. In this video, I'll break down what no one's telling you so you can actually make a choice that works for you and avoid the kind of regrets I see all too often. Disclaimer. When choosing a mortgage product for your circumstances, this will be done by a qualified mortgage advisor who will recommend the best mortgage product to suit your needs once they have carried out a fact-finding process with you. A 2-year or a 5-year mortgage rate is not necessarily the right deal for you, but if you're in a situation where a fixed rate mortgage is deemed the most suitable mortgage for your situation and you need to make a decision on a short-term versus a long-term fixed rate, then this video will point out the pros and cons of both so you're aware before making that choice in product that has been recommended to you. When choosing a mortgage product, you will be provided with 2 options, either to go for a fixed rate mortgage where effectively the monthly payment of your mortgage stays the same each month for a certain amount of time, which is known as the fixed rate period. Or the other option is to choose a variable rate mortgage, which can go up and down on a monthly basis and is usually linked to the Bank of England base rate or the lender's standard variable rate. This video is focused on fixed rate mortgages, but I will hook up the video at the end of this one just to give you a deeper understanding of all mortgage products. So first of all, what is a fixed rate mortgage? A fixed rate mortgage is designed to give you security that your monthly payment will not change for a certain amount of time. Usually 2, 3 and 5-year fixed rates are offered by most banks and building societies. Some mortgage lenders will offer you 7 and 10-year fixed rates, and a very small handful may go beyond this fixed rate period. Whichever fixed rate term you choose, most fixed rates have the same features in common. The monthly payment will not change for a set amount of time that you choose. And if you leave the fixed rate early before that fixed rate term expires, you will receive a penalty to pay, which is usually a percentage of your loan amount. And thirdly, of course, a fixed rate means your monthly payments stay the same. The penalty you will pay usually reduces over the term of the fixed rate. The penalty is there because when you choose a fixed rate mortgage, you are benefiting from a static payment which does not change. So if you leave early, you're breaking the terms of that mortgage. So let's look at the differences between the 2-year and the 5-year fixed rate. Right now, as the making of this video, 5-year fixed rates are usually lower in rate than 2-year fixed rates. However, that gap is closing, and I do believe the gap will close furthermore over the next 6 to 12 months, where rates are expected to come down another 3 or 4 times via Bank of England base rate reductions. If a 2-year fixed rate is deemed best for your circumstances, then this is usually the shortest fixed rate period you can have. And most likely, you're hoping that the rate will reduce by the time the 2-year fixed rate expires. You may feel that 5 years is a bit too long and you don't want to miss out should rates come down within that period. The advantage in a 2-year fixed rate is that you will have the opportunity to renew your mortgage again in 2 years, which is known as remortgaging. The disadvantage is that if rates have not changed at all, is that it could cost you to renew your mortgage to a very similar rate that you already have. So in this instance, it may have been better to go for a 5-year fixed rate because the advantage of a 5-year fixed rate compared to a 2-year is that you don't have those potential costs to pay when you renew your mortgage every 2 years, and therefore potentially taking on fees involved in renewing your mortgage. Mortgage lenders often charge a lender fee of around £1,000 to renew your mortgage. They do offer rates without fees, but you're usually better off taking the rate with a fee in comparison. You only really benefit from a 2-year fixed rate if rates do come down in that 2 years. So you can then renew your mortgage onto a lower rate and save further money, or at least that's the idea. So in theory, rates do need to come down in order to benefit from a 2-year fixed rate purely from a cost perspective. However, you may have time-related reasons. Maybe you want to move abroad in 2 years and sell your property. Then obviously a 2-year fixed rate would be more beneficial than a 5-year fixed rate, because if you had a 5-year fixed rate, you'd have penalties to pay if you paid your mortgage off in full after 2 years. The benefits of a 5-year fixed rate is that no matter what happens to rates during that period, you know your mortgage payment is going to stay exactly the same. And if you're not overly bothered where rates go, whether they go up or down in that period, and you can afford the monthly payment, then this could be a solid product for your circumstances. Now, let's say you have a 5-year fixed rate but decided you wanted to move after 3 years. As long as your mortgage is portable, then this will allow you to take that mortgage with you onto the next property without a penalty. However, if you wanted to borrow more funds for that move, you would be restricted to borrowing the additional money from the lender you're with at the time. And they may not have the most competitive mortgage product at that moment in time, but that is the trade-off. If you're not borrowing too much extra on top, then it shouldn't make a huge difference as long as rates haven't increased dramatically. So overall, if you like to take a bit of a risk and can afford an increase in rate, then you may be pushing towards a 2-year fixed rate. However, if you're less risk adverse and you're not going to be full of disappointment and regret if rates do come down after 2 years when you're in a 5-year fixed rate, and you take more security that your payments won't change, irrelevant of what happens to the market, then a 5-year could be, it could fit into your plans. I think the key thing here, which often first-time buyers are unaware of, is that if you do take a 2-year fixed rate, then in 2 years' time, you're going to renew that mortgage, and that is likely going to bear additional costs. However, in a marketplace that we are in right now, where it is expected that rates are going to come down within the next year or two considerably, then taking that risk of a shorter-term fixed rate might pay off. But nothing is ever guaranteed. And especially in this economy at the moment where it's so unpredictable, things can always change quickly. So when making your decision or being provided that recommendation, make sure everything is taken into account that your mortgage advisor, provides you with, and think about the risk element. Are you happy to take a punt on rates reducing, or do you prefer the security of a longer term fixed rate? That's if you're deciding on which one's best for you. Obviously, if it's time related, then you can just slot that time scale into the relevant fixed rate period. And when I say time related, I mean if you got to sell the property in 2 years or 3 years, then it's probably beneficial to go for a 2-year or a 3-year fixed rate. Bonus tip here. So a bonus tip for you in regards to this video is that quite often mortgage lenders will lend you more if you choose a 5-year fixed rate, which is something that's come in fairly recently. So if you've opted for a 2-year fixed rate and you're short on the amount you need to borrow, then you might want to tell your advisor or your bank to have a look at the option of a 5-year fixed rate, which could bridge that gap. Mortgage warning. As a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. So thanks for watching today's video. Please check out the show notes for a recap with access to any links discussed today. And if you do feel like you're getting value from this video, please do consider subscribing. Anyway, you have a beautiful day. I'll see you in the next one.